why is this? I think that the reason is that hedge funds in particular have seen the problems in the market rising. They know that there's a lack of liquidity and all the rest of it. They never take delivery. They never buy the underlying stuff. It looks like, the markets are running into difficulties.
Gold is flowing out of Western vaults and straight into the hands of China, Russia, and India. Why? They're preparing for the West's looming debt crisis, while the West remains clueless. Alasdair Macleod reveals that record-breaking gold and silver deliveries on COMEX and skyrocketing premiums signal a major market disruption. The East knows gold is real money. The West, they're selling it off. Fast. Are we witnessing the early stages of a global financial reset? Stay tuned as we uncover what this massive gold migration means for the future of money.
China is continuing to buy. The central banks are continuing to buy. Basically, physical gold is bid only. Not only the central banks, but also sovereign wealth funds in Asia and all the rest of it. And also, quite a lot of the super rich in Asia are accumulating gold. And this is in sharp contrast to the West, where we just sort of shrug our shoulders and say, well, why are they doing it? We are completely clueless about what's going on in the bullion markets. But as far as the East is concerned, they see an increasing need to protect their currencies against an inevitable crisis in the West. And that crisis takes the form of unsustainable government debt, which is leading all G7 countries, with the exception of Germany, into a debt trap. The debt trap comes from two ways. I mean, it's not just the mounting debt. And we had extraordinary deficits for the first 2 months of the US fiscal year. I mean, what, 625 billion or something? I mean, it's just going up and up and up and up and up. As far as the foreigners are concerned, they see this and they see that there is absolutely no reason why they should buy US dollars and treasury debt at anything like these yields. And the problem is that if they hold off and they want even higher yields, it just makes the whole situation even worse. So what do? You get out of dollars. And to get out of dollars, I mean, you don't want to go into another currency because, the dollar is the king rat of currencies, as it were. You're going to go into gold, which is real money, and they understand it's real money. And that's what we've lost sight of in the West. And this is why Western vaults are being drained, if you like, of any liquidity. Every time gold rises, there's someone in the West who thinks, I ought to take profits. At the Chinese or the Russians or whoever say, thank you very much. So that's basically what's going on. It's the other thing that's extraordinary, which I think I should mention, is the amount of gold and silver that's being stood for delivery on COMEX. I mean, this is a market which, the whole concept of delivery on COMEX wasn't that anybody should actually take delivery, but it was literally to tie an expiring futures contract to the underlying metal price. And but I was totting up the figures. I mean, since Thanksgiving, which is 9 sessions ago, 56.46 tons of gold have been stood for delivery, and 1,240.4 tons of silver. I mean, these are huge amounts. Now, we don't know who's actually taking this. Some of it, I guess, is remaining within the COMEX's vaulting system. But these, nonetheless, are huge amounts which are being taken out of the establishment's hands, as it were, and going into other hands. And also, if you look at the exchange for physical, I mean, some of the numbers going through there are just absolutely enormous. Now, we don't know which way it goes. I mean, exchange for physical can be inward going or inward coming or outward going. But it's a fair bet that we're looking at something which is, I think, likely to be the early indications of a crisis in the market. I have no evidence that that is the case, other than these extraordinary flows. It just reminds me of the situation we had, when we had COVID, everything shut down, and there was an absolute crisis in the exchange for physical market. I think Hong Kong Shanghai Bank lost something like $200 million on that market alone. So, you can't have a futures market where these enormous amounts are being drained out of it, of physical, and at the same time, premiums, on futures compared with physical have been rocketing. I was looking at it earlier this morning. Silver, it's come back a bit because they've bashed the price hugely. They really have. And a lot of that has been taking the wind, if you like, out of the futures markets. But this morning there was a premium in the on the silver futures contract of around about 12.5 to 13% over spot. Why is this? I think that the reason is that hedge funds in particular have seen the problems in the market rising. They know that there's a lack of liquidity and all the rest of it. They never take delivery. They never buy the underlying stuff. They only deal in derivatives. So what they're doing is they're buying, they're buying futures, or they have been buying futures, really to put the squeeze, if you like, on the swaps. And it just smells like a bear squeeze. So we've had a big fall today. After some very, very big rises. But that a lot of that is just sort of deflating the futures. So there are funny things going on, DK. But it all looks like the markets are running into difficulties, and I don't mean difficulties leading to lower prices. I mean difficulties meaning that the squeeze on the establishment, I think, is really more intense than you would think. All this stuff was coming out, and at the same time, mine output was increasing. So it's something of a miracle that the price actually didn't collapse even below that sort of 250 level, which more or less marked the bottom. But the reason for that is that China was very, very quietly, taking gold when it was offered, not bidding up, but just quietly accumulating it. And I reckon, this is looking at trade flows. It looks like it was looking at, capital inflows, because, of course, all this was, again, handled by the People's Bank of China, as the sole agent for foreign currencies. All those flows, I reckon, at contemporary prices were the equivalent, 10% of them were the equivalent of about 20-odd thousand tons, 20 to 25,000 tons. So I feel fairly confident that that's the sort of number which they had accumulated before 2002, when the Shanghai Gold Exchange was set up and Chinese citizens were permitted to buy gold. Since then, Chinese citizens have accumulated a further 26,000 tons, roughly, figure like that. Now, that's not the only form of accumulation by Chinese citizens, because banks have offered gold accounts, and the Chinese citizens are enormous savers. In the past, they've tended to buy property, which they haven't necessarily occupied, as, if you like, their pension investment. That has blown up. Stock market, and it hasn't been that attractive as far as the Chinese housewife is concerned. So they've been putting money on deposit, and at the same time, maybe buying some gold. We're talking about annual savings. Savings accumulating. This is household savings accumulating at the rate of around about $2 trillion a year. So you can see that there's a huge great overhang, if you like, of potential money going into gold. Now, we've recently seen the People's Bank of China has been reducing interest rates. And as a result of that, the returns on deposits have become less attractive. So I think we're seeing more and more demand, if you like, from the banks to cover their positions of unallocated accounts, if you like, or whether they're allocated, it really doesn't matter. But the Chinese banks, I think, have been covering their positions by picking up whatever gold they can. And I suspect that some of them have been, behind a lot of the standing in for physical on comex and elsewhere. I mean, they got to get it from somewhere.
Thank you for watching. If this video resonated with you, don't forget to like, share, and subscribe for more insights into the shifting tides of the global economy. What are your thoughts on the massive shifts in the gold market? Let us know in the comments below. Stay tuned, and we'll see you in the next one.